Click the bell icon to get latest videos from Ekeeda.
Hello friends, today we'll be discussing one question of profit reconciliation statement where we are having details of trading and profit and loss account. Let us read the question. Following is the summarized trading and profit and loss account of Sheetal Industries for the year ended 31st March 2006. Opening stock of raw material is given. In cost sheet it will be part of direct material consumed. Purchase of raw material, in cost sheet it will be part of direct material consumed. Carriage inward, this is purchase expense. In cost sheet it will be part of direct material consumed. Wages, direct labor in cost sheet. Factory expenses, in cost sheet it will be treated as factory overheads. Here they have given two parts. One amount is already paid, 52,400. Outstanding amount is added here, 2,200. So while considering in cost statement, we are required to consider full amount 54,600 as factory overheads. Administration overheads 52,500. Selling and distribution overheads 96,000. Goodwill written off. Any written off item is recorded in financial book only. It is not recorded in cost book. Next, interest on loan. This is a finance expense. Loan taken by organization and interest is paid. This expense we record in financial book. Therefore, it is debited to profit and loss account. But this will not be recorded in cost sheet. So this will be one reason of difference between profit as per financial book and cost book. Dividend. It is a dividend paid by the company, therefore it is debited here. So this dividend expense is not recorded in cost sheet. It will be part of financial book only. Income tax. Provision for income tax is not recorded in cost sheet. It is recorded only in financial book. Therefore, it may be one reason of difference in profit as per financial book and cost book. Sales they have given 4,80,000 amount and number of units they have given 12,000 units. Closing stock of finished goods 66,000. In cost sheet we are required to deduct this from cost of production. Closing stock units are given 3,000 units. Raw material closing stock we will have to deduct from direct material consumed. Interest on securities. This is an income received by business. It is an income recorded in financial book. It is not recorded in cost book. So it will be one reason for difference in profit as per financial book and cost book. Profit on sale of asset. Particular asset of business like machinery or furniture may be sold by business. There we have made a profit. This income is recorded only in financial book. It is not recorded in cost book. So it becomes one of the reason for difference in profit as per financial book and cost book. A standard unit was manufactured during the year. Now this information is for preparation of cost sheet. The cost accounting record shows the following. Material consumed ₹10 per unit produced. So we are required to calculate number of units produced. Direct wages at the rate of ₹6 per unit produced. So we are required to again calculate here number of units produced. Direct wages will be forming part of direct labor. and material will be form of prime cost. Factory overheads were absorbed. Absorbed means here charged. Factory overheads are charged at the rate of 25% of prime cost. So we are required to calculate prime cost, and to that we are required to add 25% as factory overheads in cost sheet. Administration overheads were absorbed at rupees 5 per unit produced. This is the information of administration overheads as per cost sheet. Selling and distribution overheads were absorbed at the rate of rupees 7 per unit sold. So we are required to consider number of units sold to charge selling and distribution overheads per unit rupees 7. This information is relevant for preparation of cost sheet. You are required to prepare detailed cost statement, that is cost sheet, for the year ended 31st March 2006 and statement of reconciliation. We'll prepare cost sheet with columns particular, 2 amount columns, 1 quantity column, and last is per unit column to calculate per unit cost, rupees and paise. First item is direct materials. Material consumed rupees 10 per unit produced. So we are required to calculate number of units produced. There are no opening stock of finished goods units. So number of units produced we can calculate by summation of units sold plus closing stock of finished goods units. Units sold, it is given here 12,000 units and closing stock 3,000 units. So number of units produced is 15,000 units. Material consumed rupees 10 per unit produced. So it will be 15,000 multiplied by 10, 1,50,000. Per unit it will be rupees 10. Direct wages at the rate of rupees 6 per unit produced. This is the information of direct labor. So it will be rupees 90,000 per unit, it will be rupees 6. There are no direct expenses, so we can add direct material and direct labor to arrive at prime cost. Per unit prime cost is rupees 16. Total it is 2,40,000. To this we are going to add factory overheads. Factory overheads were absorbed at the rate of 25% of prime cost. So factory overheads are rupees 60,000. Per unit it is rupees 4. We can add this to prime cost to arrive at works cost. So works cost rupees 3 lakh, per unit it is rupees 20. To this we are going to add office and administration overheads. Administration overheads were absorbed at the rate of rupees 5 per unit produced. Now we can calculate cost of production. Total 3,75,000. Per unit it will be rupees 25. This is current cost of production per unit. Closing stock of finished goods will be valued at this cost. There are no opening stock of finished goods. So we are required to deduct directly now closing stock of finished goods from cost of production. Closing stock of finished goods 3000 units. It will be valued at current cost of production per unit, that is rupees 25. This will be deducted from cost of production. So we got now cost of goods sold 3 lakh, per unit 25 rupees and units 12,000. To this we are required to add selling and distribution overheads. Selling and distribution overheads were absorbed at the rate of rupees 7 per unit sold. Selling and distribution overheads will be added to cost of goods sold to arrive at total cost. So total cost is rupees 32 per unit. To this we are required to add profit. Finally we can arrive at sales. Now sales here we are required to take as per financial book. Sales as per financial book is 4,80,000. Profit as per cost book rupees 96,000. Per unit profit rupees 8. Profit as per financial book is 1,83,000 and profit as per cost book is 96,000. Therefore we are required to reconcile them. For that purpose we are required to do working notes. While preparing working note, we are required to mark one point. First column we have taken financial book. If here first column we have taken as financial book, while preparing profit reconciliation statement, we have to start with profit as per financial book, so that we will end with profit as per cost book. If we take first column cost book here, second column financial book here, then we have to start with profit as per cost book, so that finally we will arrive at profit as per financial book. This working note will be applicable, it will be perfect only if we consider this particular order. In financial book, we have opening stock of raw material 9,000. We have purchased raw material 2,10,000. There is carriage inward 5,000. And there is closing stock of raw material 24,000. So we are required to calculate raw material consumed as per financial book. As per cost sheet, direct material is rupees 1,50,000. In financial book, direct labor wages is 75,400. In cost statement it is 90,000. Factory overheads. In financial book, actual paid 50 to 400, outstanding 2200. So it is 54,600. As per cost statement, it is 60,000. Administration overheads. As per financial book, 52,500. As per cost book, it is 75,000. Selling and distribution overheads. As per financial book, 96,000. In cost statement, it is 84,000. Goodwill written off 12,500. It is recorded only in financial book. Interest on loan 1,500. It is recorded only in financial book. Dividend paid 2,500. It is recorded only in financial book. Provision for income tax rupees 5,000. This is recorded only in financial book. Sales 4,80,000. It will be common in both the books. Closing stock of finished goods as per financial book 66,000. It will have effect of income. Closing stock, an item which is similar to having effect of income. In cost statement, with closing stock of finished goods is rupees 75,000. Closing stock of raw material effect we have already considered. Interest on securities. This is the income recorded only in financial book 17,000. Profit on sale of asset 1,20,000. This will be recorded only in financial book. We have considered all the items which are there in profit and loss account as well as in cost statement. Now let us decide the sign, whether it is plus or minus for profit reconciliation statement. The very simple concept here is, from first column we are required to deduct the figures of second column. Then we'll get here product answer. If we get that plus positive figure, we are required to add that to profit reconciliation statement. After subtraction, if we get negative figure, we have to deduct it from profit reconciliation statement. 2 lakh minus 1,50,000. So it is plus 50,000. So in profit reconciliation statement, this item 50,000 will be added. 75,400 minus 90,000. Now you get minus 14,600. In profit reconciliation statement, this item will be deducted. Factory overheads difference minus 5,400. This will be deducted. Administration overheads difference is minus 22,500. This will be deducted. Selling overheads difference rupees 12,000 positive, so it will be added. Goodwill written off 12,500 minus 0 nil, so here we'll have plus 12,500. Interest on loan 1,500 minus 0 plus 1,500. Dividend paid 2,500 minus 0 plus 2,500. Provision for income tax 5,000 minus 0 plus 5,000. So we have completed items of expenses. Now let us say items of income. Closing stock of finished goods. It is 66,000 and 75,000. 66,000 minus 75,000. So it will we get answer minus 9,000. But in case of income, we have to reverse the sign. So instead of minus, we'll take here plus 9,000. Interest on securities 17,000 minus nil. So we'll get here plus 17,000. But we have to reverse the sign, so it will be minus. Profit on sale of asset 1,20,000 minus 0 plus 1,20,000. But we have to take sign minus. We have fixed the sign. Now we'll complete profit reconciliation statement. It will start with profit as per financial book is 1,83,000. To this we are required to add the items where we got positive sign. Direct materials plus 50,000. Selling and distribution overheads plus 12,000. Goodwill written off 12,500. Interest on loan 1,500. Dividend paid 2,500. Provision for income tax plus 5,000. Closing stock of finished goods 9,000. Subtotal of all these items will be added. Now items which are to be deducted: direct labor 14,600. Factory overheads 5,400. Administration overheads 22,500. Interest on securities 17,000. Profit on sale of asset 1,20,000. We are required to take subtotal of all these items and deduct from the total, so that finally we'll arrive at profit as per cost book. Profit as per cost book is 96,000. Here we are getting total 2,75,500. From this, if we deduct 1,79,500, finally we arrive at figure 96,000. That is profit as per cost book. In this question, we have learned how to calculate direct material consumption as per profit and loss account so that it can be compared properly with the cost book items. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.